Greetings, Dr. Jeffrey Scott here, and this is my Market MRI Pro update for Monday night, February 10th, 2025. It's an exciting day for me and Praveen, or should I say Praveen and I, as we are launching the beta to the first group of beta testers in about 1 hour. Anticipate these 10 folks to take a look at it, see what they like, what they don't like, give us some feature ideas, and then unless the thing has significant issues, our plan will be to launch it officially in about 3 weeks at the beginning of March. So let's take a look at the market for, what's today, for Monday night. Again, Jeffrey Scott's my name, and we're going to be going by marketmripro@gmail.com going forward as my main email address for this product. This is for educational purposes only. Anything we talk about recommends in the spirit of education, not investment advice. The intent of the video is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky, and you should always consult with your financial advisors before making trades. And as you are aware, I've got tools in multiple different platforms. If you're seeing this out on YouTube, consider joining my Google group. It's called Top Down Trader. How do you join? You go to Google Groups, you click All Groups and find the groups you want. Mine's called Top Down Trader, separate words. If you want to link or unlink your Google profile, choose an option, and in the subscription section, choose how you want to get my updates. Join the group. It's free. I don't anticipate ever charging you. In fact, you'll get discounts on my products and invited to special education sessions that are only for the top-down group. And if you join, you can get asked for, and I'll share with you the recent 3+ hour teaching session I did. And the nice thing about it being on a video is you can stop it when you get bored. So, can you believe it? Our leaders index, which is supposed to give us a symbol of the market breaking down, and that I was looking at this cup and handle thinking, maybe this is not dying, but getting ready to break out. Into today and Monday, we had the highest high since we formed it. That sort of suggests to me the direction of the market. Now, that was today. There's no question the market could horribly break down tomorrow, or the next day, or 3 months from now. We've got tariffs, we got news, we got Fed heads, all kinds of reasons. Oh yeah, we got some inflation data. So all kinds of things going on that say the market could have some challenges. That said, this is one added to the quiver of market looks okay. Now, what do we got on Tuesday? We got jolts, job openings, and we got a bunch of Fed heads, 11, 2, and 7:30. Nothing really hurt the market too much on Monday, despite tariffs on steel and aluminum. I think part of it is relief, and maybe part of it was the fact that U.S. Steel will stay American, and the Japanese will just be investing in it and taking a stock ownership, perhaps, or debt. So we saw what came out on Monday. Tuesday, big earnings, especially after hours with AMD and Alphabet, Amgen, big one for the healthcare, Merck early on. And then Wednesday, we got Uber and a bunch of other things, and Amazon and Lilly on Thursday. So what we've seen this earnings season, I think everybody's aware, when you beat, you get rewarded. If you come in close or you miss whispers, you get hammered. So it's a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. So let's go right to, these are TradeStation. I'm still working on getting my trend lines and stuff working in the indexes. I've got them on the main charts, but still working on it. Becomes a size issue. But how good was Monday? Maybe not as good as you thought. And why would I say that? Look at the spider. Big sell-off on Friday. Inside bar on Monday. Nowhere close to getting back to where we started on Friday. Look at the Qs. Closed right at resistance. Again, an inside bar. Look at the diamonds. Yeah, the diamonds were up, but they closed below where they opened. and right at resistance. And then you look at the Russell up for sure, but my goodness, didn't even get close to resistance. So all of these were better, but not great. And if you look at volatility, still jumping on support, and then the dollar was up. When I look at the commodities, no question, gold and silver love to see tariffs up 2.29% on gold, silver up a little bit less, up 0.96%. Oil broke out of resistance with a CPR signal, interesting. And according to TradeStation with the code, that was another Hindi. We'll see if that hangs, and we see that on any other platforms. Natural gas even was up 4.18. And then the other thing perhaps concerning besides the dollar is it kind of looks like the 10-year got above the 50 and the 30-year got above the 50. So dollar up, 10-year, I won't say it's up a lot, but it looks like it moved some. 10-year maybe above the 50, 30-year up. That doesn't hold great things for the U.S. markets. Yeah. So a good day, but not a great day. If we look at my timing model, and we just highlight on the green dots and red dots, the dailies are all still in a buy signal. We don't have, on the 3-month new high, new lows, nothing is giving a signal. If I go quickly to the weeklies, we'll see how quick it is. Not always very quick. Especially when we're probably in the middle of a batch update. Let's see. Here we go. The weeklies, the Qs remain in a buy. The diamonds remain in a buy. Now, the other two are enigmas. Not really the Russell. The Russell is barely above the WMA, and its bongos have been red for a while. The killer here is this bar right here. That low at 578.55 was, or closed rather, at 580.49 was 60, it was 90, let me do my math. Yeah, about 95 cents above the WMA. And since that was below the WMA, and the weekly bongo was red, it switched the model. Boy, if I was doing it manually, and manually is not fair, so I admit it, I probably would not have put that as a sell. I would have wanted to see what happened the next week. But spiders are on a questionable sell, Russell's not. So I'm 2 and 2 on the weekly, the daily models, all 4. To me, that says it's okay to be long, but still be careful. If I go and I look at the daily briefing, and let's just do it by 1 day close, you can see Qs led in the market on Monday, SPY 0.67, Russell 0.47, Diamonds 0.4. If you look over here, the Qs, the spiders, and the Russell finished about the same level in their closing range, while the diamonds were more in the middle. If we look over here, you can see on the new high, new lows that the NASDAQ has more new lows at the various time frames, and new high on the NYSE, not so much. If we look down here and look at 1 day change, do this the right way, you could see that energy was leading at 2.3, tech 1.5, followed by industrial at 0.82. And the laggards for the first time in a while were financials, and healthcare has been kind of weak for a while. If you go back and look 50 days, financials and healthcare are both up. So pullbacks there. If I look at over here, I look at 3 different index components. I see that 2/3 of the sectors were up in the S&P 1500, 3/4, 77% in the NASDAQ, and 67% in the NYSE. Industry groups, 58% were up, 65 and 60 again favoring the NASDAQ. And advances versus decliners, well, that's an error here because I've got 3 digits when it's supposed to be a percentage. Let's see what happens when I refresh it. All right, we'll have to get that sorted out. But if you look at it where it's sitting, It's sitting, looks like 48%, 54% in the S&P 1500, and the NYSE, it looks like 58%. That's a bizarre thing. This may just be giving me a raw number with two decimal points. I'll get that checked on tonight. Still in beta for a reason, folks. If we look at the buckets, they've cleared, let's refresh it because I did it before the close. All right, they've clearly shifted some to the right, meaning on the NYSE, you have less stocks below. On the S&P 1500, you have less. The Russell 2000. Interestingly, the NASDAQ, which outperformed, actually increased the sells below from 9 to 10, or 9 from 8. Okay. Those above went up from 3 to 4. You see higher above on the Russell, but a smaller number. So looks like a stronger market to me overall. This is kind of interesting that some of the NASDAQ did not. Market breadth, not out yet. I'm doing this before I get it. I'll be looking later on to see if we got a second Hindi. I'll let you know tomorrow. And the ratio charts, we talk about communications, financials as being some of the strength over the weekend. And they gave up a little bit, as did discretionary. Technology's picking up. I mean, I just call that out. We saw improvement in technology. If we go back to the JAS layout and we look at the impulse indicator session and we look at, we have, well, what did I leave here? We should have about 3,500. Let me go to the JAS list. Okay, there it is, 3,526 stocks. I can rank them by many ways. Some of the things that we talked about over the weekend, I looked at Monday. Was not interested because of earnings, and you could see what happens when you have good earnings. Big gap up, closed in the middle. What happened there? Let's go back to this to reset that. Looking at, let's see. Here we are. Now, if we go up here, we can look at fundamentals. You can see it came out with $1.54, 3.3% growth, but a 23% surprise on earnings and a 13% surprise on revenue. I think this brought up much of the AI group. It's extended. I wouldn't be chasing it here. Other ones that we talked out, one of the ones I've been following for a long time is Axosome. Always thought of this as a takeover candidate. Apparently today they won some type of a lawsuit against Teva. One that we did highlight as one of my most interesting stocks over the weekend was LEU, and this is Centrus Energy. They are in the atomic energy spot selling, I guess, the raw materials, uranium. Anything else that we looked at over the weekend up here? Affirm. Big gap up on Friday on earnings, continuation move on Monday, super strong. SMCI, I told you I like this over the weekend. Earnings come out tomorrow, so I could understand why people didn't want to take it, but a big move in the market on, looks like 12%, 14% move on Monday. So some of the things that we talked about, 17% move, had really, really big moves in the market. One that I actually entered, I've been talking about for a while, is BYRN, Burnett Technologies. I like the pullback here. I saw this candle and I put a buy above the open and I got above the prior close, and I got into this early in the market on Monday. Talked about how I like to set my buy stops above the high of the day, and this one worked out pretty darn well. All right, so let's look at, from a top-down perspective, we can see what was leading. You can see energy, tech, utilities in that order. If I go to two-day force, I call it force, but it's not force, two-day momentum, energy, tech, industrials. If I look at energy, here's that LEU that we looked at. These are ranked by two-day momentum. One thing I like to do is to turn off, okay. Go back to energy. So supposed to open up. But we can pick perhaps the top three here: uranium, coal, oil, gas exploration, and take a look at these. And I will just run through charts each night, going through the top performers in each area. Here's that Lew, GPOR, pull back to the 50. That's a coal play, doesn't look too hot. It was up 2% though in the market on Monday. EOG, a natural gas play. We know that natural gas is holding up, kind of a sideways mover. Cord, I think this is an explorer, kind of down in the bottom. And this is the problem with a lot of the energy stocks, is we've seen such a big fall of late in oil. What else could we look at? We could look at tech, and we see these are the tech stocks coming up to the top. And this is where the strength was. One that is going to be interesting this week is APP. I love the pattern of pulling to the 50 and bouncing. And this is one that I've been in and out of. Its earnings are on Wednesday. So, we know what happens if the earnings are good, because this here looks like this was November 7th. And on the 6th, it beat by 35% surprise, 40% actual beat. And you can see what APP did. So I could go top down. The other way to look at the market's the impulse. And I'm going to cut right here and just go right to my favorite scan. I'm going to look for more than 500,000 shares, price greater than 5, and then 2-day momentums in a row. And I'm going to see 5 stocks here: BYRN, which we already looked at. Good entry today. Pony, don't know anything about it. Looks like it's an IPO. Let's just look at with no data up here, so no surprise. This one, CRNC, we've talked about a lot, especially when it had this run here. Earnings are kind of ugly, but this thing is moving. It was up 14%. And will this thing retrace some of this? Maybe. PFG, Principal Financial Group, Financial Services, kind of a sideways, choppy looking one. AVDL, a biotech, had an upgrade to 15 by somebody in the market, and you could see 2 of everything in a row here in a big move up. And then MyTech, I love the pattern, but I think this thing got hammered after hours. Why do I look at a stock like this, and I do most of my identification after hours, and I put my buy price 5 cents, 10 cents, something like that, above the close of the day. So if the high of the day, if that high was 11.12, I'm going to put it like 11.20, because I don't want this thing to get filled and have the thing sell off. So I doubt we're going to get filled tomorrow, but I actually thought this pattern looked really attractive during the session. These are some of the ones I'll be watching. Hope you have a great day, and I look forward to the full launch of what I think, at least for how I like to trade, is a really cool program. Thanks to Praveen for creating it and overachieving as always.